Right now, something unusual is happening in the silver market. Silver is hovering around $72 to $74 per ounce after extreme volatility. But here's the problem. This move is happening while tensions are rising, the dollar is strengthening, and interest rate expectations are shifting. Conditions that normally push silver down, not up. April 6th, 2026. So the real question is, why is silver still holding this level right now, and the timing? That's what makes this different. Because this is happening right now, while global tensions are still unresolved, while ceasefire talks between the United States and Iran remain uncertain, and while markets are struggling to understand what comes next. Now, pause for a second, because this is not just about silver going up or down. This is about what silver is trying to tell you before the rest of the market catches up. Over the past few weeks, silver has not behaved the way it historically does. Normally, during geopolitical stress, precious metals tend to rise steadily as safe haven demand increases. But this time, silver dropped sharply earlier, fell nearly 15% over the past month, and then suddenly started bouncing again. That kind of behavior is not random. It's a sign of conflicting forces inside the market, and those forces are becoming more intense right now. On one side, you have uncertainty, rising tensions, ongoing military threats, and unstable ceasefire negotiations. Markets are reacting to statements, threats, and shifting diplomatic signals almost in real time. On the other side, you have strong economic data coming out of the United States. The labor market remains resilient. Unemployment is still relatively low. And because of that, expectations for Federal Reserve rate cuts are fading. Now this is critical. Because silver, unlike bonds or cash, does not generate yield. So when interest rates stay high, or when markets expect them to stay high, investors often move capital elsewhere. That creates pressure. So what you're seeing right now is not a simple rally. It's a tug-of-war between safe haven demand and monetary pressure. And that tug-of-war is creating something even more dangerous: volatility. Silver is no longer moving in a straight line. It's reacting in bursts, sharp moves up, followed by sudden pullbacks, and then another push. This is not stability. This is a market trying to find direction. Now here's something most people are not paying attention to. And this is important. Silver is not just reacting to headlines. It is reacting to expectations. Markets don't wait for confirmation. They price in probabilities. They move based on what might happen, not just what already has. So when silver pushes toward $74 right now, it may not be reacting to what has already happened. It may be reacting to what could happen next. And that brings us to the real question. If silver dropped during peak fear, but is now stabilizing and pushing higher again, then what exactly is the market anticipating? Because something is shifting. Not dramatically, not obviously, but enough to create tension. And tension in financial markets is often the early stage of a larger move. Now let's zoom out for a moment, because this is where things get even more interesting. Silver does not move alone. It is influenced by three major forces: inflation expectations, interest rate outlook, and global liquidity. Right now, all three are unstable. Inflation is uncertain, not collapsing, not exploding, but constantly being influenced by global disruptions. The ongoing conflict in the Middle East has already created supply disruptions and broader economic uncertainty, which historically tends to push inflation risks higher. Interest rates are uncertain. The Federal Reserve is not aggressively cutting, and markets are adjusting to that reality. Stronger U.S. data has already reduced expectations for near-term rate cuts. And liquidity? That's where things get even more complex. Liquidity is not just about how much money exists. It's about how easily that money flows. And right now, liquidity is tightening in some areas, while shifting rapidly in others. And when liquidity becomes uneven, markets behave differently. They become unstable. That's exactly what we're seeing in silver. Now think about this carefully. because this is where most people miss the signal. If silver is reacting to multiple forces at once, and those forces are pulling in different directions, then the price you see right now is not a clear trend. It's pressure building inside the system. And when pressure builds, it doesn't release slowly, it releases suddenly. Now here's something you need to pay attention to, because this is happening right now. We are heading into a critical window, a period where markets are closed, but information continues to flow. And historically, this is when risk increases, because if something changes over the weekend, if tensions escalate, if negotiations break down, then when markets reopen, prices adjust instantly, sometimes violently. So when silver is holding near $74 right now, right before this kind of uncertainty window, you have to ask yourself, is this stability or is this positioning? Because those are two very different things. Stability means the market is calm. Positioning means the market is preparing. And based on current volatility, it may not be calm at all. Now here's where it gets even more important. Because there is one key factor, one trigger, that could decide what happens next, a factor that is not obvious at first, but is quietly influencing everything. And in part 2, we're going to break that down, because what happens next in silver may not follow the pattern people expect. Now let's go deeper, because what you're seeing in silver right now may not just be volatility, it may be positioning. And there's a difference. Volatility is random, positioning is intentional. And markets like silver, especially in 2026, are rarely random. Over the last few months, silver has gone through something very unusual. It surged to extreme highs earlier this year, even crossing above $100 at one point, then collapsed violently, losing more than 30% in just days, before stabilizing again in the $70 to $80 range. That kind of movement doesn't come from retail traders. That comes from large positioning shifts, institutional money, hedge funds, global asset flows. And here's where things start to get interesting. Because while everyone is focused on price, then the real story is happening in the background. The silver market right now is dealing with two completely different realities at the same time. The first is short term. That's what you see on the chart. Rapid moves, sharp reversals, uncertainty. But the second reality, that's long term, and it's much more stable. According to industry data, the global silver market is expected to remain in a supply deficit for the 6th consecutive year in 2026. That means demand is consistently exceeding supply. Not occasionally, not temporarily, but structurally. Now think about what that implies. Even if prices fall temporarily, even if volatility increases, there is still an underlying imbalance in the system, and that imbalance matters. Because historically, when commodities remain in long-term deficits, prices tend to stay supported, even during corrections. But here's the problem, and this is where most people get confused. Short-term market behavior does not always reflect long-term fundamentals. Right now, silver is being influenced by something else, something more immediate, and that is monetary policy. The Federal Reserve, along with other major central banks, is still holding interest rates at relatively elevated levels, not aggressively raising, but also not cutting as fast as markets expected. And that creates pressure, because higher rates strengthen the US dollar, and a stronger dollar tends to weigh on commodities like silver. So what you have right now is a conflict between strong long-term fundamentals and restrictive short-term monetary conditions. And when those two forces collide, you don't get smooth trends, you get instability. Now here's where it becomes even more critical, because this isn't just about the Federal Reserve. Global institutions like the IMF have already warned that ongoing geopolitical conflict could lead to slower global growth and higher prices at the same time. That combination is extremely difficult for markets to price, because slower growth usually reduces demand, but higher prices especially from supply shocks, increase inflation. So what do central banks do in that situation? They hesitate, they delay, they wait for clarity, and that hesitation creates uncertainty. And uncertainty is exactly what you're seeing reflected in silver right now. Now let's bring this back to the present moment. Because this is happening right now, silver is holding near a critical range. Not breaking out fully, not collapsing either. That's not a trend, that's compression. And compression in financial markets usually leads to expansion. In simple terms, when a market becomes tight, when it moves in a narrow range, when buyers and sellers are both active but indecisive, it builds pressure, and eventually that pressure releases, sometimes upward, sometimes downward, but rarely sideways for long. Now here's something very important, and this is where you need to pay attention. Silver is not just volatile. It is one of the most volatile major assets in the world. In fact, historically, silver can move 2 to 3 times more aggressively than gold during major shifts. That means when things change, they don't change slowly, they accelerate. That's why you see moves like plus 10% in days, minus 20% in weeks, and sudden reversals that catch people off guard. And that's exactly the kind of environment we're in right now. And now let me ask you something. If silver is sitting in a high volatility zone, if it is influenced by both long-term deficits and short-term monetary pressure, if geopolitical tensions are still unresolved, then what happens if one of those factors suddenly shifts? What happens if the Federal Reserve signals something unexpected? What happens if the dollar moves sharply? What happens if geopolitical tensions escalate further? Because right now, all of those scenarios are possible, and markets are trying to prepare for all of them at once. That's why price action feels unstable. It's not confusion, it's anticipation. Now here's the key insight, and this is what most people are missing. Silver right now is not reacting to certainty. It is reacting to probability. It is pricing in multiple possible futures at the same time. And that's why movements feel inconsistent. But underneath that inconsistency, there is structure. A structure built on supply deficits, monetary pressure, and geopolitical uncertainty. And when those three align, the move that follows is usually not small. Now here's where things get even more serious, because we are approaching a moment where one of these forces may start to dominate. And when that happens, the balance breaks. And when balance breaks in a volatile asset like silver, moves don't happen gradually, they happen fast. And most people realize it too late. In part 3, we're going to take this even further. We're going to walk through what could actually trigger the next major move, the scenarios, the possibilities, and what silver might do if things escalate from here. Because what happens next may not give you time to react. Now this is where everything starts to come together, and also where things start to get uncomfortable. Because up to this point, what you've seen in silver could still be explained as volatility. Sharp moves, corrections, rebounds, nothing unusual for a market like this. But what happens next? That's where the real risk and the real opportunity begins. Right now, silver is sitting in what analysts would call a decision zone. Not a confirmed breakout, not a confirmed breakdown, just a tight, unstable range where multiple outcomes are still possible. And when a market like silver enters this kind of phase, it usually doesn't stay there for long, because historically, silver does not move slowly out of uncertainty. It accelerates. We've already seen this pattern earlier in 2026. Silver surged to extreme highs above $100, driven by strong demand and geopolitical tension, and then corrected violently, dropping back toward the $70 range within weeks. That kind of move tells you something important. It tells you that silver is not just reactive. It is highly sensitive, and that sensitivity means one thing. When conditions change, silver doesn't adjust gradually. It reprices. Now let's walk through what could actually trigger that next repricing event. because there are three realistic scenarios forming right now. The first scenario is escalation. If geopolitical tensions continue to rise, if negotiations fail, if conflict expands further, then uncertainty increases, and historically, during periods of sustained uncertainty, investor demand for tangible assets like silver tends to rise. We've already seen signs of this behavior. Silver demand has been supported by ongoing geopolitical risks and investor interest, even after recent volatility. But here's the important part. This doesn't guarantee a straight rally, because unlike gold, silver is also an industrial metal. So while fear may push demand higher, economic uncertainty could also reduce industrial usage. And that creates a split reaction. That's why even in escalation, silver could move higher, but not smoothly. Now, the second scenario is stabilization. If tensions ease, if ceasefire discussions regain credibility, if markets begin to believe that the situation is under control, then uncertainty declines. And when uncertainty declines, safe haven demand weakens. We've already seen this happen recently. Silver and gold both dropped when investors began doubting the clarity of geopolitical outcomes and started reducing positions. That means even small shifts in sentiment can trigger large moves. Now, the third scenario, and this is the one most people underestimate, is monetary surprise. Because right now, central banks are in a very delicate position. The Federal Reserve, the European Central Bank, and even emerging market central banks are all dealing with the same problem. Inflation is not fully under control. Growth is not fully collapsing. And uncertainty is not going away. That combination creates hesitation. And when central banks hesitate, markets become unstable. Now imagine this. What happens if the Federal Reserve suddenly signals that rates will stay higher for longer? That strengthens the dollar. That tightens financial conditions. And historically, that tends to put pressure on metals like silver. On the other hand, what happens if economic data weakens unexpectedly? Then rate cut expectations return, liquidity improves, and metals could benefit. So once again, you don't have a single direction. You have competing forces, and silver is sitting right in the middle of all of them. Now here's something very important. Because this is happening right now. Silver is not just volatile, it is one of the most volatile major commodities in the world. Recent data shows that silver's price swings have been significantly more aggressive than gold, driven largely by speculative positioning and thinner liquidity. Which means, when the next move starts, it may not give you time to react. Now let's bring this into a real-world scenario. Imagine this weekend. Headlines continue to shift, new developments emerge, statements are released, markets remain closed. But positioning doesn't stop. Traders adjust expectations, institutions rebalance risk, and uncertainty builds. Then Monday arrives, markets reopen. And suddenly, silver doesn't open where it closed. It gaps, up or down. And that gap is where most people get caught, because they were waiting for confirmation. But markets don't wait. Now think about this carefully, because this is the moment where decisions are made. If silver breaks above this current range and holds, then momentum could build quickly toward higher levels, potentially revisiting previous resistance zones near $80 or beyond, depending on conditions. But if it fails, if pressure builds in the opposite direction, then the downside can accelerate just as fast. That's the nature of this market. It doesn't move slowly, it moves decisively. And right now, we are at that decision point. Now here's the part most people don't realize. The next move in silver will not just be about silver. It will reflect something bigger, something happening across currencies, interest rates, global risk sentiment, because silver sits at the intersection of all of them. And when something shifts in that system, silver reacts, sometimes before everything else. So what you're seeing right now is not just a price level, it's a signal that something is building. and the direction of that signal has not been confirmed yet. In part 4, we're going to bring everything together, the final perspective, the bigger picture, and what this could mean, not just for silver, but for the market as a whole, because what happens next may not look like what people expect. Now step back for a moment and look at the bigger picture, because what's happening in silver right now may not just be about price. It may be about transition, a shift in how markets are reacting to the world. Over the past year, silver has already gone through one of the most extreme cycles in modern history. It surged more than 140% in 2025, breaking long-standing resistance levels and attracting global attention from both institutional and retail investors. Then, in 2026, it corrected sharply, dropping from extreme highs and entering a phase of instability. And now, it's trying to stabilize again, right in the middle of geopolitical tension, monetary uncertainty, and shifting global expectations. That kind of pattern is not random. Historically, when an asset experiences explosive growth, followed by sharp correction, and then enters a volatile consolidation phase, it usually means one thing. The market is trying to find a new equilibrium, not the old price, not the old trend, but a completely new range. And that process is never smooth. Now here's where it gets even more important. Because silver is not just any asset. It sits at the intersection of two worlds, the financial world and the industrial world. On one side, it behaves like a monetary metal, influenced by interest rates, inflation expectations, and central bank policies. On the other side, it behaves like an industrial commodity, driven by demand from sectors like solar energy, electronics, and electric vehicles, all of which continue to expand globally. And that dual nature is what makes silver so unpredictable. Because sometimes those two forces align, and when they do, you get powerful, sustained moves. But other times, they conflict. And when they conflict, you get exactly what we are seeing right now, volatility. Now let's connect this to today, April 6th, 2026. Global markets are not in a stable environment. Geopolitical tensions remain unresolved. Conflicting signals about ceasefire negotiations continue to move sentiment back and forth. At the same time, strong U.S. economic data is keeping the dollar elevated and reducing expectations for interest rate cuts. And that creates pressure on metals like silver, because when yields remain high, when liquidity is constrained, when central banks hesitate, markets don't move clearly. They move cautiously, then suddenly. Now here's the key insight, and this is where everything comes together. Silver right now is not trending, it is compressing. And compression is one of the most important signals in financial markets. Because compression doesn't last forever. It builds pressure. And when that pressure releases, the move that follows is usually fast and often unexpected. Now ask yourself this: if silver is sitting near a critical level, if it has already shown extreme volatility this year, if global uncertainty is still unresolved, then what happens when something finally breaks that balance? Because it will. It always does. And when it does, silver may not give a warning. It may not move slowly. It may not give you time to react. Because historically, when silver moves after a compression phase, it accelerates. That's when you see rapid breakouts, sudden reversals, gaps that catch traders off guard. And that's why moments like this matter. Not because of what has already happened, but because of what could happen next. Now here's the final part. And this is the part most people ignore. Markets don't reward certainty, they reward anticipation. By the time something becomes obvious, the move has already happened. So what you're seeing right now is not confirmation, it's a setup. A setup building under uncertainty, under pressure, under conflicting signals. And setups like this don't stay quiet forever. They resolve. The only question is, in which direction? And that is what the market has not decided yet. So as silver holds near this level, as volatility continues, as headlines keep shifting, just remember this. The biggest moves usually come right after moments like this. And most people only realize it after it's already too late. And now we wait, because silver is not moving randomly right now. It's reacting to pressure built from volatility, shifting expectations, and a market that still hasn't decided its direction. We've already seen how fast this metal can move, surging to extreme highs, then collapsing just as quickly, sometimes losing over 20 to 30% in days before stabilizing again. And that's exactly why moments like this matter. Because when silver compresses like this, it doesn't stay quiet, it breaks. So the real question is not what happened, it's what happens next. Will this level hold and push higher, or will pressure build and break it down again? Because one thing is clear, the next move may not give you time to react. If you're watching this right now, pay attention. Don't ignore the setup. And more importantly, tell me what you think. Do you believe silver is about to break higher from here? Or is this just another setup before a drop? Comment below. I want to see how you're reading this market. And if you're following moves like this, make sure you subscribe. Because what's happening in silver right now is part of something much bigger, and we're going to be tracking it step by step before it becomes obvious to everyone else.